The secret to high probability trading in Forex is multi-time frame analysis. In just 2 minutes, I'm going to show you exactly how to top-down analyze EUR/USD from the weekly chart all the way down to the 15-minute chart for a sniper entry. Let's dive in. First, we start with the weekly chart to capture the big picture. Here, we aren't looking for entries. We are looking for the dominant market direction and major key levels. Is the market trending up, down, or sitting at a historic weekly support or resistance? Knowing this prevents you from trading against the smart money. Next, we drop down to the daily chart to align our bias. If the weekly chart is bullish, we want to see the daily chart confirming that momentum. Look for the daily structure. Are we making higher highs, or is the price retracing into a daily demand zone? Once the daily structure aligns with the weekly trend, our directional bias for the day is locked in. Now we narrow it down to the 1-hour chart to find our zone of interest. This is where we refine our levels. We look for specific hourly order blocks, key liquidity pools, or supply and demand zones that sit right inside our daily bias. When the price enters this H1 zone, we get ready to strike. Finally, we execute on the 15-minute chart for the perfect entry. We wait for the price to tap into our H1 zone, and then we look for an execution trigger. This could be a powerful bullish engulfing candle, a pin bar, or a classic shift in market structure. We enter right here, place our stop loss safely below the zone, and target the next major liquidity level. By combining the macro view with micro execution, you drastically cut down your risk and maximize your reward. If you want to master more institutional trading strategies like this, hit that like button and subscribe for more. Happy trading!